So at this point, you've probably heard of stocks and you might have even heard of bonds, but have you heard of money market funds? So FreeTrade has recently made available money market fund ETFs, and in this video I'm going to be explaining what money market funds are, and then I'm going to jump into the FreeTrade app and go through some of these options and see whether or not this is a good option for investors or anyone looking to save a little bit of extra cash. So money market funds are low risk investment options that aim to protect your money whilst also earning income from current interest rates. So unlike many other funds that invest in stocks, bonds or even commodities, money market funds are deemed a lot less risky as they invest in things like short-term government bonds, treasury bills or certificates of deposit. And usually these bonds or treasuries are very short term, so the money market fund always stays very liquid. They are generally thought of as very low risk investments where you can park your extra cash in your investment accounts. It can be very tempting as part of your portfolio to keep a lot in cash in case one of your stocks becomes within your price range. However, as we know, keeping cash can be quite counterintuitive, especially in periods of high inflation. Also, as we know, in periods of high inflation, usually what happens is the interest rates do go up, meaning that if you put your money into money market funds instead of keeping them as cash, you can be on your way to trying to battle that high level of inflation. So then most people would actually put their money into money market funds instead of keeping it as cash, as it gives you a good place to park your cash temporarily when you're thinking about holding off from buying a stock. There is always an option to put that money into an instant access savings account. However, this usually means that you're taking your money out of your investment account to the instant savings accounts back and forth. And if this is within a stocks and shares ISA, this is not usually a great option. So as I said, because money market funds actually put their money into very short-term stuff, they are very, very liquid. This means that when the time comes to withdraw your money from the money market fund, you should receive more than you actually put in without fearing the value of the fund has gone down in the 2 days that you put it into. However, just like with any other investments, a money market fund is not a guaranteed investment, although it is considered very, very low risk, and most people would deem it as completely zero risk. There are still risks in investing into money market funds. There are certain times and market conditions where money market funds may actually yield you a loss, so volatility still exists within money market funds. In addition to that, as we'll see later on in the video, these money market funds will still actually incur a total expense ratio, meaning that there'll be a small fee for holding this fund for a set period of time. So today when I logged into my FreeTrade account, I got a notification saying meet our money market ETFs. So FreeTrade has now included a collection of money market ETFs. So these are exchange traded funds based on the money market funds, although they will not be 100% the same as the money market funds directly. They will try their best to be as one-to-one as possible. Therefore, it is worth mentioning that within these money market fund ETFs, there will be a little bit of spread that I will explain a bit later on. So as you can see, there are a number of money market fund ETFs, from the Xtrackers overnight rate swap, the Lexor smart overnight return in pounds, the Lexor smart overnight return in dollars, the Pimco sterling short maturity, and then a few more such as the Pimco sterling short maturity, the Pimco US dollar short maturity, Xtrackers sterling cash, and the Lexor federal funds US dollar cash ETF. So let's just go into some of these money market ETFs and kind of explain as an investor what you can expect from these ETFs. So as you can see, this is the Xtrackers overnight rate swap in US dollars. This is a passively managed exchange traded fund that tracks the federal funds exchange rate, also known as the interest rate US commercial banks lend money to each other overnight. So like FreeTrade said, essentially it attempts to replicate the performance of a deposit if it were to earn interest from the federal funds rate, and the interest is reinvested daily. So this fund does this by replicating the performance of the federal funds rate total return index synthetically, and the income received by the fund is reinvested. So what is fun to see is that basically these money market funds are like ETFs that pretty much never go down, although please take never with a grain of salt, as even money market funds will have some sort of volatility. For example, even today in the beginning of the day, you can see the money market fund did actually drop a bit, but we can see over the past 7 days it is just slowly going up. Over the past month it is slowly going up. Over the past 3 months also the same, and we can just see over the maximum time period we can see that it's literally just going up, although by very, very small amounts which replicate the federal funds rate and the interest that these banks charge overnight. So if we go into maximum, we can see that there has been a change in the curve, and this curve is just a reflection of rising interest rates. So as you can see from around the beginning of 2022. The Federal Reserve in America has increased interest rates very steeply, meaning that you'll be earning more money from the money market funds. But overall, as you can see from this money market fund, that the return is pretty much steady. So if you hold some money into this for a short period of time, within a few days, you should be getting a bit more than you deposited, as the interest is accumulated daily. But it's very important to know that there is a total expense ratio of 0.15%. So this is an annual equivalent rate of charge of 0.15%, which is quite similar to other ETFs that also have a fee that covers passive managed fees in addition to a few other miscellaneous fees. So that being said, it's very important to look around for different money market funds and seeing what they yield at a particular time. Currently, the interest rates are very high, meaning that the money market funds will also be paying high accordingly. You may have noticed that bank accounts are very slow in actually translating a higher interest rates back to the customer. With money market funds, you should be getting this immediately, because most of these money market funds actually rely on the actual real interest rates. So in addition to Xtrackers, we do have the Lexor Smart Overnight in pounds. So if we go into that, we can see that within the past month, there has been some sort of volatility. As you can see on this day, it was quite high, meaning that money market funds are definitely not a guaranteed way of getting a return. You're better off putting your money into an instant savings bank account like Chip if you want a guaranteed return, although as an investor, moving money from one account to another can be quite draining. Still, in the maximum time period, we can see that the trend is going up, and since October 2022, because the Bank of England has increased interest rates very rapidly, we can see that the return has increased accordingly. So this one is the Lexor Smart Overnight Return in Great British Pounds. This is an actively managed exchange traded fund that aims to achieve short-term returns higher than the SONIA. And if you didn't know what the SONIA was, the SONIA is a sterling overnight index average, and it's the rate that the UK banks lend to each other overnight. So it aims to achieve the short-term returns above the SONIA whilst offering low risk and low volatility. This is done by investing in a portfolio of financial instruments and repurchase agreements. So the income received by this fund is reinvested, as you can see, constantly increasing in its value. So the total expense ratio of this fund is 0.07%, which is a whole lot lower than the one that we saw before. In fact, it's around twice as cheap. So because the federal funds rate and the Bank of England's central rate are both 5%, both of these money market funds can be a great option to put your money into. So unlike with investing, these money market funds can be done for very short-term periods of time. For example, if you wanted to put your money for 1 week, you can put your money into the money market fund, and because of the high liquidity, more than likely whenever you want to sell out of that fund, you can just sell out of that fund and quickly just buy whatever stock or bond you wanted. And lastly, I'm going to look at the Pimco Sterling Short Maturity Money Market ETF. And as you can see, over the past month, there definitely has been some volatility. For example, if you bought on July 19th and you needed your money back on July 21st, you would have lost a bit of money there. Although it's not a huge amount, it is significant if you had put in a lot of money. And we can see from the maximum that there is a huge amount of volatility in this fund actually. And in order to understand why, let's read the description. So the difference here is the fact that it is actively managed, meaning that you are paying a lot more for somebody somewhere to be managing the fund and making decisions on where the money goes. So essentially, an active managed fund will have a much higher total expense ratio, as you can see, 0.35, and this will eat into some of your returns. So this fund invests in securities with shorter maturities. Typically, the debt it holds has an average maturity from 0 to 1 years and a maximum of 3. So this could be more for a medium-term hold rather than the other money market funds where there is little risk that within a few days period that you will receive less money than you put in. So a few pieces of key information before you look into money market funds. So the first is the fact that there is no actual fractional trading with money market funds on FreeTrade. For example, if I want to put £10 into this fund, I will be able to buy exactly 0. So you must actually pay whole share amounts. And some of these money market funds can be in excess of £1,000, meaning that you need to put that minimum amount in before you can start investing in money market funds. So like I said in the beginning, with money market fund ETFs, there's going to be a bit of spread that exists between the price that you can buy and sell, meaning that if you want to quickly get out of your money market funds, you might not sell it for the amount that you are thinking you will be getting. A lot of these ETFs might be derived in pounds, but they might be exchanged in dollars, meaning that there might also be a foreign exchange fee added to the total fee, meaning that you might not again get as much as you had initially thought you would. So do consider all of this plus more if you want to get into money market funds, especially with FreeTrade. But I'm glad they have the option to do so, because until now we have to have, as a paying customer, £11.99 a month. We're only limited to 3% interest on our uninvested cash, and that is limited to a measly £10 a month. So make sure to check out some of my other videos, and I will see you in the next video.